Now we turn our attention to Jenny Horne, host of Next Gen Investing. And we touched on some of the details of Nvidia, but you really have more, and we'd like to hear more about it. I mean, it is our story of the day.
It is. I mean, it's the story of the day, and I'd argue the story of the week, frankly, because it's finally given some clarity, at least some commentary on the geopolitical situation, as Nvidia has become really a policy player at that. And so I will say, from listening to the earnings call, there was a bit more caution as far as, I mean, like, their enthusiasm on right now the obviously relationship with China, which has been a bit frayed. But I mean, all in all, I agree with what you and Kevin were just saying. It was still not a report that scared the children by any means. I mean, data center revenue did rise to $41.1 billion. That was a 56% pace of growth, slightly underperforming against analyst forecasts. And the modest miss did trigger that initial investor concern, especially given the central role it plays in their AI narrative, and so much of their growth and that really, I mean, like 56% pace of growth is scrutinized, because how can they sustain that pace of growth is the major question, but it does justify, I mean, their relatively loftier valuation. Now, China export restrictions and H20 chip uncertainty did occur during the quarter, of course, even though export licenses were granted late in the period. The company cited these ongoing regulatory confusions, which included some unclear terms about the U.S. government's demand for about that 15% slice of their revenue from China sales. But their CFO did note that if geopolitical tensions ease, they could book easily between $2 and $5 billion in H20 chip revenue in the third quarter. But the timeline and certainty do still remain unclear. And again, words that the street doesn't typically like to hear from its market behemoth that is Nvidia. We saw earlier reporting estimated a roughly about a $4 billion shortfall that was tied to H20 restrictions. So I think that, hey, if you're able to come out net positive on that's definitely a win. But also encouraging was the fact that we did hear from Jensen Huang that he right now is meeting with Trump right now about selling Blackwell AI chips to China, and he's willing to give basically the U.S. government a cut of these Blackwell chip sales. So that's per some reports we got actually following the earnings announcement. So that's also, I think, huge, because it just provides some degree of clarity. Analysts did raise alarms about some of the absence of those China-related sales. I mean, combined with the slowing sequential growth in data center segment, as well as cooling demand from hyperscalers, and many still view China as just this untapped opportunity, which right now is estimated by Nvidia as much as a $50 billion market. So restrictions are still definitely imperative to, or I would say the lack of restrictions are imperative to their future growth. But right now, strategic implications and broader risks. Data center miss, although small, I think really did overshadow the strong revenues we saw elsewhere, as there was still a huge, enthusiasm really tied to this report. Analysts also have been very much focused on the growth in China does still remain to be very strong, but that access to the China market could serve more as this turbocharger really than a lifeline. And overall valuations concerns have risen into this report. But I mean, as far as conviction is concerned, I've seen nothing but really positive analyst praise. Now, like Wedbush, for example, one of our consistent bulls in this name, did keep their price target at 210. But I mean, we're talking like price targets of 240, 230, 210. All-time highs in this name are around 184 a share. So we're still seeing, favorability from that sell side in reaction. I just think that when you have data center revenue that misses expectations, and that's probably one of your most watched growth metrics, you're going to see some pressure. And expectations were so high for this name. And we've also, only pulled back about 1.5% from highs. The bar, I don't know if we were even able to meet it, but I will just say from listening to the call, a bit more cautious than in past quarters.
Look, we think about the growth and what's driven in the data center part of the business, GPUs overall, the complementary products, all the things that connect to them, etc. So revenue in that division did rise 56%, as you noted, and came in at $41.1 billion. It was just short of the $41.34 billion in the quarter. So that was definitely the one spot that folks were focusing on as a slight weakness. The big picture here, though, they're not factoring H20 into China going forward. Blackwell is now the story, and that could really represent some some new growth and opportunity. So we'll have to wait and see. But for most part, it certainly seemed like a win on the top and bottom line. And as you noted, the analysts are still over $200 and plus. Let's get to Snowflake. And Snowflake is higher after its quarterly report.
Yeah, it's Snowflake. I mean, this is a name, I mean, of course, very different than NVIDIA, but also I think that the hugely encouraging tone we've now seen from Snowflake, I mean, Okta, MongoDB yesterday, all of them are really showing this strength and hopeful recovery in the software sector, which has been relatively challenged. Now, Snowflake has actually fared better than some of its peers because we're still up about 29% on the year, and that is through yesterday's close. So we could still actually see some further upside, obviously, when we open today, poised for a really nice pop this morning on the back of, again, all things considered, a really nice earnings beat and soaring, I mean, as a result here. So Snowflake said now it expects its third quarter revenue to fall between around 1.24 and 1.13 billion. That was slightly ahead of expectations. And for the year, they also did give estimates for their product revenue to be better than expected, and did really see, I mean, overall expectations hugely revamped from their last reporting period. They said they have an enormous opportunity ahead as they continue to empower every enterprise to achieve this full potential through data and AI. And the combination of this accelerating revenue growth and operating margin leverage is what they said are helping now drive this expansion from current levels. So there's room for further upside as far as, again, the street is concerned. I saw an Evercore ISI note with a $280 price target, and they're just one of several. BTIG also did raise their price target to $276, saying this was a second quarter report that was exceptional and that it's a clear beneficiary of AI as companies really work to centralize their data and build these various applications. So they do, I mean, Snowflake, when you think about their overall role in AI, they do give places this basically a marketplace to organize, store, and secure their data to then help power AI. And we've seen, I mean, shares again climb this year. Well, we've seen some choppiness as of late, but all things considered, facing industry competition has been a headwind, as well as earlier this month completing a funding round that valued the company at, or Databricks, excuse me, one of their rivals, completed a funding round of around $100 billion. And also that shows there's many entries into this space that Snowflake is competing with. But this report, I think, definitely signals that, hey, competition may be heating up, no doubt, but Snowflake is still growing at a pace better than expected, beating on its metrics. It's still shaking off the competition reasonably well, Nicole.
Okay, good to see you, Jenny Horne. Thank you. Some key names there.